Is David Perlmutter from Quantum Listing, and we are very fortunate today to have Liz Berthelette, the research director from the Massachusetts Boston office of Newmark Knight Frank. And I'm embarrassed to say that I forgot to pull up your bio, Liz, before I started. So perhaps you would be kind enough to tell us a little bit about yourself. But first, before we do that, I do want to thank the News Funnel, our wonderful sponsors. And they sponsor each of our webinars. They are a fantastic resource for anybody in the commercial real estate industry. They have a aggregation of news from all sorts of commercial real estate sites, and you can even put their feed on your own website to bring people back to your site again and again to stay informed on our industry. So Liz, before we get going on the plant-based meat of our webinar today, could you tell us a little bit about yourself?
Sure, thank you. I've been in the research side of the business for almost 15 years now. As you mentioned, I run the Boston research team for Newmark Knight Frank. I've been here since the summer, and just plugging along, continuing to do research, put out good content, all that kind of stuff.
Well, I have become a big fan of yours over the last several months, and I really think you have great insights into commercial real estate, and so I'm very excited for today's webinar, 10 Years in 10 Slides, a decade of CRE in review. So shall we get going?
Yeah, I am ready.
Okay.
So given that we've entered a new decade, I wanted to take some time today to discuss 10 of the biggest trends that I've seen in commercial real estate in the last 10 years. So if you want to go to that first slide, we can kick it off.
Here we go.
So I think this theme, shifting demographics, is one of the most important drivers of many of the trends that we're going to subsequently talk about in today's webinar. So some are calling the aging baby boomers population sort of this demographic cliff, given that there are so many people in that generation and many of them are retired, reaching sort of that out of the workforce age. And one stat that I thought was really interesting was that 10,000 people in this cohort will reach the age of 65 every day through 2030. So it's just a massive wave of population moving out of the workforce, retiring, making way for the millennials, which now compromises the largest generation in the U.S. labor force, and have been accused of quote unquote killing homeownership, mayonnaise, the power lunch, light yogurt, and many, many other things in the cultural in the business world. The millennials are impacting housing, work-life balance, where companies are locating, how they work, runs the gamut. I feel like we continue to talk about millennials on and on and on. And then there's Generation Z, which is the generation after the millennials. And we have yet to see what they're all about, but it'll be interesting because the oldest people in that cohort are starting to reach working age. So they're entering the labor force. So it'll be really interesting to see what happens with them in the future. So moving on to the next slide, I think this story over the summer was sort of top headline. We reached the longest post-war U.S. economic expansion cycle, surpassing the last record of 120 months, which happened, from 1991 to 2001. I think our current months of consecutive expansion are at 126 or 127, somewhere around there. And we saw record low unemployment rate, lots of job growth, steady, stable economic growth over the last 10 years. But I will point out that what's interesting about this recovery is cumulative GDP growth and job growth has been slower than in previous expansion cycles. So although it's been longer than any expansion period that we've seen in recent history, but definitely more slower growth and sort of less pop on that expansion post recession, which is something that's different than some of the other recoveries that we've seen in the last few decades. So looking at this recovery in the next slide, I don't think it would be any surprise to anybody in the industry that this is a tech-driven recovery. And, looking back over the last 10 years, tech-related growth is a key driver of economic expansion in the U.S. If you want to flip to that next slide. So I think what some of the interesting trends that have come out of this tech-driven recovery, the acronym TAMI, which stands for Technology, Advertising, Media, and Information, that's sort of synonymous with the tech industry now, a term that we use all the time to identify that sector. In the office market, TAMI tenants account for a much larger share of leasing than sort of the more traditional finance, insurance, real estate, legal. And that has been a trend that came out of the last 10 years. And this is especially true in urban submarkets. I know in Boston, a lot of the tech growth is downtown or in Cambridge and places that are more urban as opposed to the suburbs. And other trends coming out of this tech-driven economy is, artificial intelligence, big data, robotics, automation. So all of those are interrelated to growth in the tech industry that are newish and gaining traction and big trends that happened over the last 10 years. So I think in terms of millennials and tech, this next trend in the fourth slide is changing workplace trends, how people are working. It's clear that the who, what, where, how, when, and why of working has evolved over the last 10 years. Open floor plans became all the rage as employers were looking for space efficiencies, and employees wanted more flexibility in their work environment. Shared offices, short-term leasing, it became about community and collaboration. Hoteling was something that came out of these last 10 years. Flexible work schedules, work from home opportunities sort of reduced that need for permanent workspaces. The average square feet per worker dropped over 8% during those last from 2009, and it's now just under 200 square feet per worker. So each individual employee is getting less space, which is allowing or has allowed tenants to right size their overall footprint in the office market. So I definitely think that all of those changes have, changed the way that people are working and office environment and all of that. And I think demand for this space has also given rise to different and greater amenity offerings. So offices with slides and libraries, beer taps, bringing your dog to work, all of those things sort of coincide with these workplace trends that we've seen over the last decade. Now, moving on to the next slide. Yep, you can skip one more slide ahead. So all these workplace trends are leading sort of to this discussion about co-working, and that has sort of been top of mind in more recent years. The reinvention of office space has, led way to explosive growth in co-working, which, is closing in on 100 million square feet of office inventory in the U.S. There are markets like Miami, New York, San Francisco, where co-working accounts for more than 3% of current office inventory. So there are some markets that are heavily focused on co-working. And I think, globally you can see that the number of co-working spaces has grown exponentially in the last 10 to 15 years. And the chart on this screen sort of has a projection. I think that was probably made prior to the WeWork's IPO attempt. I don't think those projections are probably as accurate, but regardless, I think on a global scale, there is still a need and a desire to have this type of space offering in the office market. And I just want to take a few minutes to talk about the landscape of co-working operators and how that's changed. In 2009 and prior, there were far fewer operators, and you can kind of see Regis, although they're still around, a lot of the Regis locations are rebranding to their spaces, model and tech space. They were bought out by Industrious, which you can kind of see in that 2019, section. And then Sunshine Suites was one of the first co-working spaces in New York, and they are no longer operational. So you can see what's sort of taken over. Spaces, Industrious, WeWork, Hotel, and those are just a few of the current operators that are working globally. I think it's an important topic to talk about. Although with everything going on with WeWork, it'll be interesting to kind of see how that shakes out, given how much growth we saw, over the last 10 years. So switching gears, moving to the next slide and talking about the retail revolution. I want to look at how retail has fared over the last 10 years. And I will say the word apocalypse has been thrown around a lot in regard to the retail market. But I think many are really pointing to an evolution as opposed to a total destruction. Sure, if you're looking at store closures, if you're looking at headlines, it seems pretty grim in the retail market. The number of closures we saw from 2017 to 2019 is far outpaces what we saw even during the Great Recession. Based on, figures that I found, there was more than 23,000 retail stores closed during that, 3-year time period. And comparing it to 10 years earlier, from 07 to 09, it was roughly 13,000 stores that closed. So it's pretty significant in terms of the physical occupancy of retail. And a lot of this has to do with e-commerce and how that's driving these shifts in the marketplace. So as a percentage of total retail sales, e-commerce now accounts for more than 11% of that total. And, in 2010, that number was only 4%. And it would be even higher if we took out sort of auto and gas, because those things you don't really purchase online. And e-commerce retail sales continues to grow at a faster pace than overall retail sales. So it's definitely a trend that's been impacting the physical world, the brick and mortars and the malls, department stores, big box retailers. That's all been sort of compounding what's been going on in the retail market. And then other things I want to point to that have emerged as key trends in the retail market, over the last decade is sort of clicks to bricks. So we've seen online retailers actually opening up brick and mortar stores, shoppers moving to mobile devices to order their goods online, and then sort of omni-channel retailing and sort of this entertainment or shoppertainment, as some people call it. So all of those, I think, are some of the key trends that have been happening in retail, and probably one of the more transformative areas of commercial real estate that we've seen recently. So we can't talk about retail and e-commerce without talking about last mile logistics. So if we move on to the next slide, you can kind of see, e-commerce and how that's related to industrial. This sort of refers to that final step in the delivery process. And as people have continued to purchase things online, the need and want for faster and faster delivery times has driven demand for infill, last mile logistics, industrial properties. And, one stat I'll throw out there is 63% of consumers now expect items to be delivered within 3 days. I mean, I know I like my Amazon to come in one day. So, getting these goods to consumers at such a fast rate has really driven demand in the industrial market. And I would say, 10 years ago, industrial was sort of the ugly duckling. It wasn't something that institutional investors were really taking a shine to. And now to today in 2019, 2020, it's sort of the darling of commercial real estate. Rents have been growing rapidly. Vacancies are at decades low. There's been just a lot of demand from e-commerce and all sorts of other industrial users. And I would be remiss if I didn't talk about Amazon. They're sort of synonymous with this trend. And in 2018, Amazon actually accounted for 40% of e-commerce sales. Wow. So, that's a big number. And that drives how much distribution space they need, how many fulfillment centers they need. And globally, Amazon has 175 fulfillment centers across 150 million square feet. And 110 of those are located in North America. And I know locally, there has been a lot of activity from Amazon. We definitely have a lot more distribution centers in Massachusetts and in Greater Boston because we're a population hub. We have a lot of congestion, and people want their prime now, fresh, Whole Foods, whatever it is, as quickly as possible. So I think we sort of are an example of this trend that's been going on for the last couple of years. So I want to take a few minutes to talk about the multifamily market. And this sort of relates back to the economy and shifting demographics. And there are several factors that have led to, one of the strongest multifamily markets we've seen in recent history. Demand for rental housing sort of grew out of necessity post-Great Recession. Many people were sort of forced out of ownership or locked out of the housing market. They couldn't afford it anymore. And, most people need a place to live. So that sort of necessity drove some of that rental demand early on in the recovery. And then as the housing market picked up, the economy picked up, it became sort of affordability was more of an issue, shifting housing preferences from those millennials that we talked about, and urbanization trends sort of pushed the home ownership rate down to levels that we haven't seen since the 1960s. So the last few years, we've kind of seen this rate recover somewhat since bottoming in 2016, but we're nowhere near that peak that we saw in 2005 of 69%. There's still a lot of renters out there. Home ownership is either unattainable for some or not a priority for some, and that's what continues to drive what's going on in the multifamily market. So as a result, developers have responded to this surge in rental demand and with development. And, new supply has been able to keep up somewhat, but, not as quickly as I think rental demand has grown. And, Boston's a good example of that, especially downtown and in the urban markets where we've seen surging populations. A lot of young people want to be here, and there just isn't enough housing options. So, we've seen rental rates rising very, very quickly in many markets. And some of the older millennials, they're starting to purchase homes, but many of them are still renters. And again, they're having an impact on the type of multifamily housing that's being built and how it's configured and the types of amenities. So we're seeing, sort of a categorical shift in apartment living where a lot, especially these urban projects, there's smaller personal space and larger communal space. There's increased amenities, gyms and common areas and all of those kinds of things. And again, that urban living young people that rent apartments, they want to live near where they work and they want to be in cities that are vibrant and have things to do. So all of those things combined have been, driving what's going on in the multifamily market this last decade. And you can see the millennial apartment bingo on there. I just do that in for fun
Yeah.
to kind of
Yeah, I love
to
that.
kind of
I think that's great.
how young people might live their life in their apartment. So moving on to the next slide, I want to talk about the biotech boom. And, that's something, that we talk about often here in Boston. The Boston Cambridge market is definitely a key life science metro. And it's, this has been a major driver in some of the more core biotech markets, but the growth has been unprecedented in the last 10 years. And especially this asset type used to be considered niche. You had your very specific players who built and owned these types of assets. And now life science properties are pretty much considered a core asset. They're garnering very high dollar per square foot when they are trading, especially, in Boston and Cambridge and some of the deals that we've seen. And they're attracting institutional capital and new players. So owners that weren't traditionally in this arena are now kind of playing there because of how much growth that we've seen in this market. And a lot of what's been driving the boom in biotech has been advances in technology, huge investments in R&D from pharma companies, major IPO activity, VC funding. It's all helping to drive that growth and all helping to drive demand for this very specific commercial real estate asset. And again, it's the beneficiaries are us in Boston and San Francisco, San Diego, Research Triangle Park in Raleigh and Seattle, seeing outsized rent growth, outsized demand. But we're also starting to see some, emerging clusters in secondary markets like Philadelphia and New York, where they haven't traditionally had a ton of this, biopharma R&D type activity. So it's starting to spread out into other markets and form new clusters as the industry has grown. So I want to end our discussion talking about PropTech. So it's not necessarily completely related to, market fundamentals or the economy, but I think this has been one of the biggest changes to come out of the last decade for our industry. Just, looking at this topic, and, this slide is from 2018. I'm sure there's more companies that could be added here to this picture. But if we were to have the same map of companies from 2010, it would be far less dense. Traditionally, commercial real estate, we've been slow to adopt technology, to change, technological advances. All of those things have been slow to move their way through our industry. But I feel like there's been a noticeable shift in recent years, and we have, dozens and dozens and dozens of PropTech companies, and they're focused on, the gamut within the industry. It's listings, data, financing, the built world, construction, engineering, all of those kinds of things are coming into play in PropTech, and how that's changed has been really significant. I think moving forward, as this PropTech and continues to evolve, we'll see some consolidation in the marketplace. I think there's a lot of companies that are doing similar things. But overall, technology is here to stay, and I think the industry is looking for new and better solutions to help, move the industry along. So that's all I really had today. Those are my big takeaways from the last 10 years.
Well, there's a lot to unpack there, boy. That's thank you. I think I'm going to we'll come back to your info, and I'd like to open up the floor to our participants today and see if they have questions and comments. Let's see. Okay, so I see Kenton had said co-living and is a big new trend, and that is true. It makes a lot of sense too for um, younger people, especially given the affordability. I think one of the webinars we had in 2019 was with George Cruz, who's a expert in multifamily, and one of the comments he was making was that sure, there's a ton of apartments being built, but there's not that many affordable apartments being built because the economics for affordable housing don't really work unless there's subsidies, and governments are not necessarily going to rush to provide those necessary subsidies. Um, are you seeing in the Boston market enough supply coming online of affordable housing?
I would say that's a topic of discussion all the time in Boston. I think we have sort of that same problem where there's a lot of luxury housing that's being built just because those are the types of projects that pencil here. We're a dense market, we're land constraint. Land is very expensive, so there's a lot of cost, and then obviously we in the city have union labor, so that adds a layer of cost to everything as well. Um, so I would say we've seen more multifamily being built probably than in the last 20 years here in Boston. But to say that it's affordable, probably not. And I mean, we have seen several co-living operators move into the Boston market and purchase up buildings, although I don't know if any of them have um, built anything out yet or are operational. But for a market like ours, where you have a lot of young people that need places to live and they, don't have a car and want to be close to their jobs, co-living makes perfect sense for them. Especially because there's less, or there has been less importance put on, having a big kitchen and cooking and having all these material things and needing space for stuff. So it makes, those kinds of things make sense here in Boston.
So my son, I don't know if he's part of a trend, but I think so. There's a name for what he is. He's a digital nomad. He's living in Colombia, in Medellin, Colombia, right now, and working for an American tech. I was working recently for an American tech startup, and he was getting not a Silicon Valley wage, but certainly better than a Colombian wage for doing what he was doing. And living in Medellin is super affordable. And the neighborhood he was living in was like Brooklyn. It was fun and tons of young people everywhere. And lots of restaurants, cafes, and the weather is gorgeous all year round. So, maybe more young people should consider something like that before they decide to settle down and have families and take on additional responsibilities that come with that. But I think housing is a huge issue, and uh, I've seen everything from articles on making housing out of shipping containers to micro houses in markets like San Francisco. So that's a real issue that we're going to have to address as a society. Um, uh, and retail, it's incredible. I can tell you just like from my family that the number of online purchases is accelerating. And I have a daughter who lives in Manhattan. She's getting Whole Foods delivered, through Amazon Prime, every week, and it really is a very different. In addition to having started Quantum Listing, I'm a broker, and in 2006 or seven, I had started marketing a property that was an industrial property that had some environmental issues, so it wasn't really being pushed very hard. And before we found a buyer for it, the recession hit, and retail wasn't really very viable. And in the last, 12 months, the ownership and I decided to market it as an industrial redevelopment rather than a retail redevelopment. And within 2 weeks of making that change, um, we had two full priced offers for the property, and it wasn't priced inexpensively. It's just that the demand for industrial and to solve that last mile problem has become so intense. Even though it's in contract, I'm still getting calls every week about that property, and multiple calls. I wish I would get as many calls from some of my office and retail listings as I'm getting for that. It really is quite remarkable what how the world has changed. And in the beginning of my brokerage career, I was really doing a lot of retail deals, and that has changed. The mix of what I'm doing has really changed a lot because the world has changed. Look, since I've been in the real estate industry for over 30 years, and during that time, there have been several major changes to the retail landscape. First it was the advent of big box stores, and they were sort of backfilling the supermarkets that had gone from 30,000 square feet to 65,000 square feet. But at one point the sky was falling, and people thought, we'll never find anybody for those stores. And there's been two or three other examples like that. Lifestyle centers, or big box centers then came in, lifestyle centers, and then the so-called retail apocalypse. And it's really kind of interesting. It seems that the shopping center owners are much more ahead of the curve in terms of backfilling their vacancies than the downtown city landlords. I think it'll be very interesting to see if the city landlords catch up. I mean, there's certainly tons of fitness concepts and restaurants coming into the cities, but there's still if you walk through New York City, there's a ton of vacancies.
You get thrown out. Oh, I'm sorry, I forgot it was
not me. Anybody else have any comments or questions or anything they'd like to add? Don't be shy. I guess we have, but it is, and I think you were really spot on your observations on these different asset classes, and I want to thank you for that. I am going to share. Hold on. Are we back to the screen? Okay. So if you want to contact Liz, you can follow her on Twitter at Liz_Berthelette. And you can email her at elizabeth.berthelette@ngkf.com, and her phone number is there. Liz, I hope your phone is ringing off the hook after this. We have some really great webinars coming up in the next few weeks. Next week we have one on quantum listing for build-out users scheduled. And then February 26th, Becca Carlson from Carlson Marketing will be with us on the hows of marketing. She shared with us the whys of marketing back in 2019, and then we are going to have a webinar on March 4th on the DNA of CRE with folks from Build Out and the Broker List. The DNA of CRE is a fantastic survey. I think it's now in its fifth year, and I would encourage everybody listening or watching later to participate in it. It's a great resource for our industry because you'll be able to benchmark yourself against your peers in terms of how you're working, what types of efforts you're using in terms of social media, uh, and whether you're using, are you a lone wolf? Are you working on a team? Are you using virtual assistants? So it's really a great way to get some insight into how your peers are working around the country. So I would encourage you to check that one out also. If you want more information on quantum listing, check out our How It Works section. Click our Schedule a Demo button, which is at the top of most pages of our website, or contact us through the Intercom button or support. And I want to thank our friends at the News Funnel once again for their support in sponsoring our webinars and helping get the word out. You can have the best content, but if nobody's there to watch it, it's sad. So thank you, News Funnel. And Liz, thank you again so much for your time. Really appreciate it. You obviously put a lot of work into this, and I hope you'll come back again later this year and share your further insights with us.
Yeah, thank you guys for having me. This is always great to be working with you.
Yeah. Oh, and one last thank you, and that's to Julia from our team who helped put this webinar together for us. So thanks, everybody, and we will see you the next time.